Hello, I'm David Chaston with 98.9, brought to you by interest.co.nz. This week, everything you need to know in 90 seconds at 9 o'clock, with news China's clamp on outbound investment has been very effective. But first, today's dairy auction was an uninspiring event for everyone involved. Overall prices were down 1% in US dollar terms, fractionally more in New Zealand dollar terms. The key whole milk powder price was down less, by 0.5%. It was the sharp fall in skim milk powder price, however, that caught the eye, down 5.5%, and back to levels last seen in May 2016. And the butter price was also weak, down 2.5%, but it's still at a relatively high level. Overall, dairy prices, though, have held in a very tight range since the big jump 1 year ago. Today's 1% fall is the second in a row, on top of the 2.4% 2 weeks ago. The industry will want to be sure that this trend doesn't continue if it's to hold its new season payout forecasts. Meanwhile, on Wall Street, the Dow Jones Industrial Average rose above the 23,000 point mark for the first time ever earlier today, boosted by strong earnings reports, but has since slipped a little lower. The broader S&P 500 index is also slightly lower. Broadly in line with market expectations, American industrial output picked up modestly in September, a sign a key sector of their economy is weathering the hurricane-related disruption that hit the prior month. Industrial production rose 1.6% year-on-year in September. Canada's banking watchdog unveiled tougher mortgage financing rules that take effect from the 1st of January 2018 that could sharply slow mortgage borrowing and therefore house buying in Canada. China's outbound direct investment dropped by a massive 42% year-on-year in the 9 months of September. There was only $78 billion released, an average of $15 million for each of the 5,159 companies approved. That fast slowing takes outbound investment to countries involved in the Belt and Road Initiative to $9.6 billion, accounting for only 12% of total ODI. Those Belt and Road investments are the ones getting approval now, reinforcing the idea that politics rather than opportunity is playing a heavy role in rationing these funds. New analysis by S&P has been dismissive of China's efforts to control leverage in their economy, calling moves so far as baby steps that don't really address the risks involved. In Australia, the release of the RBA's minutes shows them warning that any further increases in the currency would hurt their growth. And they say they are not about to raise their 1.5% benchmark interest rate anytime soon because high levels of household debt and weak wages growth are likely to be constraining influences. In New York, the US Treasury 10-year yield is now at 2.30%. And the price of crude oil is slightly lower today, and now just over $51.50 a barrel, while the Brent benchmark is just over $57.50 a barrel. But the price of gold, however, is down very sharply, slumping $19 to $1,284 an ounce. However, the Kiwi dollar will start today pretty much unchanged at 71.7 US cents. On the cross rates, we're higher at 91.4 Aussie cents and at 61 euro cents. Our TWI is still at 74.4. I'm David Chaston. That was 98.9, brought to you by interest.co.nz.